Good morning, and can I welcome everyone to this, the fourth meeting of the Public Audit Committee in 2026. The first item on our agenda is for members of the committee to consider whether or not to take agenda items 3, 4, 5, 6 and 7 in private this morning. Are we all agreed? Agreed. We are agreed. Thank you very much. And our principal item this morning is consideration of the report into the administration of Scottish income tax by the National Audit Office and the letter of assurance that accompanies that from the Auditor General for Scotland. So I'm very pleased to welcome our witnesses this morning. We are joined in the committee room by Stephen Boyle, the Auditor General for Scotland. Morning, Auditor General. And alongside Mr Boyle is Richard Robinson, who is a Senior Manager at Audit Scotland. And I'm very pleased to welcome online this year from the National Audit Office, Gareth Davis, who's the Comptroller and Auditor General at the NAO. Good morning, Mr Davis. And alongside Gareth Davis is Peter Morland, who is the Director of Financial Audit at the NAO. We are quite limited for time, I think, this morning because Mr Davis and Mr Morland have to leave for a prior engagement around 10:15. So we will all need to be disciplined in questions and answers. But before we get to those questions, could I invite, first of all, the Auditor General to make a short opening statement, after which I will invite Mr Davis.
Well, many thanks indeed, Convener, and good morning to the committee. Convener, as you'll know, Scottish income tax is a key part of the Scottish Government's financial powers and an important contributor to its financial sustainability. In my November 2025 report on financial sustainability and devolved taxes, I set out my view on the use of devolved tax powers, including the management and risk and opportunities associated with Scottish income tax. Today's session focuses on the administration of Scottish income tax for 2024-25. This is the 7th year that HMRC has published Scottish income tax outturns. The 2023-24 outturn are reconciled through the 26-27 Scottish budget, resulting in an increase of £406 million. HMRC's accounts also include an estimate for 2024-25, but that does not yet affect the Scottish budget. HMRC administers Scottish income tax within the UK tax system. The National Audit Office audits HMRC's accounts, and the Comptroller and Auditor General reports to the Scottish Parliament on this work today. I have provided the committee with additional assurance on the NAO's audit work. I am pleased to advise the committee that I am satisfied that the NAO's audit approach was reasonable and covered the key audit risks, and that the findings in the CNAG's report are reasonable and they are reasonably based. The CNAG has concluded that the outturn on Scottish income tax is therefore fairly stated. Convener, very much looking forward to this morning's session, but I'll very happy to leave it at that point just now. Thank you. Thank
you very much indeed, Auditor General. And can I now invite the Comptroller and Auditor General, Gareth Davis, to make an opening statement. Mr Davis.
Morning, Convener, and good morning to the committee. Apologies for not being there in person for the first time in many years, but a clash of dates made it impossible, I'm afraid. But I will keep my remarks short, as you say, just in the interest of time. And the Auditor General for Scotland has summarised the headline findings around the reasonableness of the estimates and outturn. In terms of the outturn, the approach taken by HMRC in calculating them has remained broadly the same as last year, and I've concluded it remains reasonable. Both the outturn and the estimate demonstrate growth in the Scottish tax take, reflecting, amongst other things, the increase in income compared to thresholds, but also increase in the higher and top rates and the introduction of the advance rate in Scotland. Of course, Scottish income tax policy continues to diverge from that of the rest of the UK, and for this year's report, HMRC continues to assess the risk of non-compliance, despite that divergence, as remaining low. However, given the time lag between the changes to tax policy and information on non-compliance, it's important that HMRC gets on the front foot to check that it has a well-planned approach in place which clearly addresses any changing compliance risks. And that's why this year I've recommended that HMRC completes its planned evaluation of the Scottish compliance approach as soon as possible, so that it can identify priority areas for improvement. I've also encouraged HMRC to consider whether there are any more immediate areas of improvement, for example, where it could introduce the collection of more Scottish-specific data. We recognise that any changes HMRC and the Scottish Government agree to make must be practical and cost-effective with a clear purpose and benefit, and we'd encourage them to fully explore what improvements can usefully be made. My team and I worked closely with the Auditor General of Scotland and colleagues at Audit Scotland in this work, and I'm grateful as always for their cooperation. Thank you.
Thank you very much indeed, Comptroller and Auditor General. And we will touch on all of those areas in the course of this morning. Can I, though, begin with the Auditor General? You mentioned the report you brought out in November last year into financial sustainability and taxes, which looked in some depth at the dynamics of Scottish income tax setting and the benefits that brings. And I think you've said that in the tax year 25-26, whilst through policy choices made by the Scottish Government, £1.7 billion is going to be raised from Scottish income tax, the impact on the budget is a net rise of just £616 million. And that's due to the tax-based performance gap, as you describe it. Could you perhaps elaborate a little bit on that? Why does that gap exist? Is it to do with earnings levels, employment levels? What lies behind that figure?
Yeah, very, very happy to do so, Convener. And the factors that you mention are indeed relevant. It's also bound up in the fiscal framework between the Scottish and UK governments. And I think in some of the evidence that we gave to the committee, forgive me, I think it was December on this matter, we made recommendations on a number of fronts. One is that for this to be set out more transparently in some of the budget documentation for the Scottish Government's proposed draft budget. But the factors behind it were also referred, I think, in correspondence that the committee received from the former Director General for the Scottish Exchequer, that made reference to some of the structural economic factors that exist in the type of jobs that exist in Scotland relative to other parts of the UK that are part of that relative arrangement of how the fiscal framework operates. And in order to close that gap, the alignment between tax and economic policies has to become clearer, was one of our recommendations. But really the driver, and Richard might want to say a little bit more about this, is for Scotland's economic developments to prioritise higher paid jobs in Scotland. That has been the primary lever with which to close that tax performance gap, so that in due course you won't have a gap as significant, would be the aspiration, as currently exists between those two figures. Before passing to Richard, Convener, one thing I would just to reiterate, all of the money that's set in the Scottish budget and income tax does flow through, but of course the spending power to the budget is where the difference actually lies.
Block grant adjustment.
Correct. So yes. The adjustments through the fiscal framework. Yeah. And you want to add, Richard?
Very, very briefly, I think, just to say, here today we're talking about the assurance over those outturned figures, which are then driving the difference between that and the BGA, and then any reconciliations that cover. There will be a difference between the amount that flows in from the income tax and the block grant adjustment. That may be different than what the SFC calculators, the total tax that could be raised if there was no difference in anything else apart from policy. We know that that's not the reality. We know from the report that we produced last year that there are differences in the sectoral makeup of Scotland compared to the rest of the UK, earnings growth, employment growth, and some elements of behavioural change. So what the tax performance gap is enabling us to see how big that gap is, and then is a useful tool potentially for the Scottish Government to explore how it goes about correcting that, whether that's through economy, tax policy, or whatever it may be.
In the interest of time, I've just got one final question before I move on, and that's on transparency. You mentioned in your last answer that the Scottish Government, in your view, could be more transparent about this gap between the money it raises and how that ricochets through the block grant adjustment as a result of the Scottish fiscal framework. Could you say a bit more about what you would expect to be done by the Scottish Government in order to fulfil that demand that you have for more transparency?
Yeah, thanks, Kavir. There's a couple of points that I'll refer to. One is, just to remind the committee, one of the statistics in their November report drew on the Scottish Government's own analysis of survey of the public about their understanding of tax. And it said that 50% of people in Scotland don't have a good understanding of how devolved taxes operate. So there's a real opportunity there to close that. So transparency is also about helping people understand and awareness of what goes on. We also broadened out in the report to talk about how some of the documentation is presented in the budget materials, that in the 25-26 budget papers, the amount that's raised through tax was much more clearly set out than what would then the Scottish budget benefit would be. That latter figure is in one of the appendices. I think we were clear that it would be much more transparent if those two numbers were side by side in the budget documentation. I'll turn to Richard actually, because he's been looking at this closely. I think we've seen some small progress in the budget documentation for 26-27, but it's not yet at a level that you could clearly see without having to go to a bit of trouble as to what those two figures might be. Richard.
Thank you, Auditor General. I think the Auditor General has summed it up nicely, actually. There's acknowledgement in the budget documents that there will be other factors at play, as we've talked about in our report, which will affect what the impact on the Scottish Government would be. It's still the case that you refer across to a separate document in order to get to the spending power figure, as opposed to that headline tax policy only figure that we've referred to in last year's paper as well.
Thanks. Well, we'll obviously keep this under active review, or the committee in the next session perhaps will keep it under active review, but it's a really important area. Colin Beattie's got some questions for you. Colin.
Thank you, Peter. The first line of question, I think, is more for NAO. Over the last few years in particular, as the Scottish rate of income tax and Scottish tax system moved a bit away from the UK one, there's been concern about taxpayers' behavioural response. And there's been no clear data to indicate that there has been any change in response. That's certainly the most up-to-date information I've got. Are you aware of any plans for the HMRC to update its research on taxpayers' behavioural responses to income tax divergence? It was previously indicated that could become an annual study and is probably arguably more relevant today given the increased policy divergence on income tax. I think you might be on mute.
Yeah, thanks. Yes, I mean, that's really what's behind our recommendation in our report, because I agree with you that the message consistently from HMRC to us and the Scottish Government has been we're not seeing evidence of changes in taxpayers' behaviour so far in response to the divergence of the two systems. But of course, if you don't look, you don't find. And so and of course HMRC is looking, so I'm not suggesting they're not, but they do have planned a more comprehensive evaluation exercise of how is this risk changing? Are the procedures we have in place for detecting non-compliance, and in this case, non-compliance by misstating addresses, or driving changes in migration patterns? Is there any evidence that changes our current view that this is not a significant difference in risk between the two countries? And that's work that they have planned. Our recommendation is that they should complete it as soon as possible, because we're not completely clear what their timetable is for that. But I agree that the greater the divergence, the greater the risk that it takes too long to pick up changes in behaviour.
Only two issues in connection with behavioural change being, misleading addresses and. But what about simple behavioural change, where people change their lifestyle, change the way they invest, change whatever's necessary to reduce the tax burden, we assume legally? Are there indications on that, and how quickly would we pick that up?
Well, I think there's two. Everybody's motivated to pay the right amount of tax, but no more. And so HMRC invests significant effort in understanding taxpayer behaviour across the whole UK. So far, my answer was focused on the differences that may be emerging in Scotland compared to the rest of the UK. But no, there's a significant body of work underway which we audit separately from the report we're talking about today, to identify what's happening to the tax gap. So, in other words, is there evidence that the amount collected compared to what should be collected is changing over time, and is there any change in behaviour? And of course, the ways in which people do try and avoid tax are many and various, and it's a very significant part of HMRC's work. So, of course, all of that applies to Scotland as well as the rest of the UK. The specific question our report tackles is the divergence between the two sets of arrangements changing the risk, particularly around the border and particularly around a misstatement of addresses. But you're right. The broader question of taxpayer behaviour is a subject of a very large amount of work at HMRC.
And presumably that's across the UK as well, because obviously it's a strong indication as to where the tax revenues are heading. Exactly,
and with that, if you look at the NAO's work on HMRC in the last 12 months, we did a very detailed report on HMRC's approach to ensuring that wealthy individuals were paying the right amount of tax. Key focus for HMRC, because it's a significant part of the overall tax take, and obviously wealthy individuals have access to advice and expertise that normal taxpayers don't, and so recognising all of that. There's a specific focus in HMRC on that element of tax compliance, and we did a detailed report on how it's performing in that area. Actually, UK-wide, seeing a significant increase in the tax take from that group of taxpayers. So it's a large part of our work with HMRC across the board. Our recommendation in this report is focused on the diversions in Scotland.
Thank you. Just looking at HMRC's outturn figures. And, of course, the Scottish budget, the amount that's estimated for income tax and so on is based on forecast revenues by SFC and OBR. Now, HMRC reports 3 years later on what the reconciliation is and what the actual figure is, which can be a plus or minus. And the reconciliation in 26-27 is plus 406 million because tax receipts have been higher than forecasted. The Scottish Government can only borrow a limited amount to smooth out the effects of these forecasts and possible forecast errors on the income tax receipts. Now, the amount they can borrow is roughly 600 million, rising with inflation every year. Now, 600 million could be seen as an arbitrary figure. I'm not at all sure how that was reached. But what is it based on? Given that income tax receipts are rising faster than inflation, is that limit still fit for purpose? Now, I'm not sure if it's the Auditor General or NAO that should be answering that one.
Well, I maybe start, actually. If by all means, if Gareth wants to come in. I think, actually, I'm not even sure if it's a question for either of us, perhaps more for the Scottish Government and the engagement that they have with the UK Government, Mr Beattie. You'll know that the limits were changed in the most recent update to the fiscal framework. And we also note, Convener, through correspondence from the Cabinet Secretary for Finance and Local Government to the Finance and Public Administration Committee, the Scottish Government's desire for an earlier review of the fiscal framework than the timetable that's set for 2028. So the limits have changed. You're right that you mentioned and now inflated too. Whether those are the right limits and the right borrowing powers associated with it, I think is a matter for the UK and Scottish Government to agree upon through any further iteration to the fiscal framework. I think what is clear, though, in terms of the amounts are changing and changing quite significantly in terms of tax take. And I think what the NAO's report sets out is that the the volume of tax collected in Scotland and in the UK is increasing. And I think there's that alignment of the associated risk and borrowing powers will be a key part of the consideration of any changes to the fiscal framework.
But wouldn't you consider it part of the audit function to comment on the adequacy or otherwise of this limit?
I think there's two things. One is about the aspects of that will be policy. So, as you'll know, it won't be for us to comment on the merits of policy. I think what we saw in the last iteration was an evolution, recognising that the limits, will be subject to inflation. I think equally, we would say it's important that the powers are consistent with the level of risk. But beyond that, I think it's tripping in, into territory of what the components of the fiscal framework would be. But,
I mean, this limit's quite important because, in effect, you're sort of balancing your books on it at the end of the year. I would have thought that there would have been a comment in the audit report as to how it was functioning, whether it was functioning well. Was it adequate? Did it appear to be doing the job it is?
Bishop, do you want to come?
I may come in briefly. One of the points that we did raise in the report was about how because you're right, the Scottish Government has to manage the volatility between years from the fact that the reconciliations are going to come in. Some of those are going to be positive reconciliations, as we're talking about here, and some negative reconciliations, depending on what those outturn results are. One of the things that we do mention in the report is that the Scottish Government so far has been able to stay within those borrowing powers and manage it within years, but that we recommend a more detailed strategic response or set out to how it will manage those reconciliations together. So over the medium term, if you know that some reconciliations are going to move you up, some down, how are you using your borrowing and reserves powers together to manage that and to kind of level out that flow between the years. So this is something that we recommended the Scottish Government look at to have a better understanding of how it's going to manage these reconciliations over the course of a few years. The details of the extent to which what the boundaries should be on borrowing, etc., is a decision for the Scottish Government to negotiate with the UK Government, and as it last did so in 2023.
I'll move on to...
I'm going to bring you back in later if we've got time, but I'm conscious that we're really up against the clock. So I'm going to... the Deputy Convener's got one question in this area that he wants to put to the NAO, and then I'm going to go to Joe. Jimmy.
Thank you, Convener. Yes, just in the interest of time. Mr Davies, good morning. Thanks for joining us. I just wanted to carry on this theme and ask you just one question, actually, and it's a comment that you made to the committee in last year's session, and I'll just, for the benefit of the record, quote it to you. And you said, one of our big critiques of government generally, including HMRC, is the surprisingly low level of investment in evaluation of the impact of different policies. So I guess my question is that still the case? Is that still a concern? Or have you, in the last 12 months, seen any improvement in the levels of investment that either the government or HMRC have made in understanding how tax divergence and tax differential policies in Scotland have an impact on the Scottish budget?
I think we have seen a greater focus, actually, and more activity as well. So not just discussions and planning, but so, for example, the move to annual checks in some cases when they hadn't been annual checks up to then. The exercise where we recommend proceeding to complete the evaluation as quickly as possible, that is underway. So that is an additional commitment that's been agreed since we last met. And so I think the answer to the question is yes, there is an increase in the effort going in there. And the question is, first of all, how quickly is that evaluation going to be concluded, which is why we've made our recommendation. But also then using the results to work out where is there a genuine cost benefit in greater detailed information about how some of these trends are diverging in Scotland, or where is that just an expensive way of collecting data that wouldn't have much practical use? And I think that's the key judgment that the evaluation is going to come to. But yes, there is more focused effort.
Thank you very much. Joe. has got some questions. Joe.
Thanks very much. I'll try and tighten this down because I think you've maybe covered this area a little bit, but I just want to talk about compliance risk. Obviously, you've already said that the assessment, HMRC's assessment of Scotland's in terms of compliance risk is similar to that for the UK overall. Now, that's given the current levels of divergence. Is there a level of divergence where you think that that risk would change based on, would there be a change at a certain divergence level?
Obviously, we don't have any kind of separate evidence to HMRC, so it's not that we can kind of challenge their conclusions with a different evidence base, but just sheer logic suggests that as the level of divergence increases, some of these kind of just economic incentives will be becoming stronger. And so rather than just assume that the risk doesn't change, I think it does put the onus on gathering the evidence to check whether that's the case or not. And that's, again, why we've, in previous years, we haven't felt the need to make the kind of recommendations that we have this year. And it's because we think that level of divergence is getting to the point where you would want to say, OK, maybe right. Maybe it's still correct to say that the risk is not changing, but we need to prove that rather than assume it.
So when you're doing that work to assess whether the risk has changed, do you just look at is it just the tax base? Is it just that side of things, or do you look at the wider social contract, for instance, which the evidence is that people are physically moving from the rest of the UK into Scotland because of the social contract and in spite of tax differences?
You're definitely straying beyond the auditor's remit with those kind of considerations, except that obviously there's data to inform that picture, and so understanding how how taxpayers are moving around the UK is a really important thing for HMRC, partly because its system depends on correctly identifying Scottish-based taxpayers through their addresses and the allocation of the S suffix to the taxpayer record. So it really does need, if there's an increase in the number of people who are moving from England to Scotland, say, then that's going to change the workload associated, HMRC's workload associated with keeping its records up to date. So, of course, it needs to understand the trends. Whether that results in a risk different to before is a separate question, and that's where we think that the evidence base needs updating through this evaluation.
General?
Yeah, I think I absolutely agree, of course, with Gareth's assessment, but I think the thing that perhaps caught my eyes in the NEO's report at figure 5, where it produces an analysis of the proportion of income tax paid by different taxpayers, Mr Fitzpatrick, and just noting that the top rate of tax paid covers 20% of total taxpayers. So I agree, it's not for auditors to talk about maybe kind of population movements or incentives, but and I think this perhaps speaks so importantly of some of the engagement that HMRC is having with top rate taxpayers, given how pivotal they are to the totality of tax paid.
Okay, thanks. Talked earlier about the evaluation that's ongoing. Was there something in specific that triggered that evaluation, and what can we expect from it?
Perhaps I could bring my colleague Peter Morland in on that question. Peter.
Yes, certainly. I think in terms of the evaluation, this is something that HMRC has had planned in place for a couple of years now, and it links back directly to the changing risks that you're seeing because of the different tax rates between the two countries. And I think in terms of what they're planning to do, it's about how quickly they can do that evaluation now, because we're at the stage in terms of, if you stand back and look at it, the difference between Scotland and the rest of the UK is now quite well established. So that's one of the things that we are sort of really pushing on.
Okay, thank you very much. I'm going to invite Graham Simpson to put some questions to you. Graham.
Yeah, thanks very much, Convener. Mr Davis, you mentioned the S code, and I remember we asked you about this last year. So a number of companies have not been applying the S code, which is the Scottish code. Where are we now? Has the level improved?
Yeah, if I'll just make sure I've got the right figure for that. Yeah, actually, we think that around about 45,000 errors are being picked up in the application of that code. Not, a fairly similar level to previous years, going up slightly. I think that, as always with these measures of when a system is picking up errors, in one sense, it's reassuring to see that it's working. In other words, I'd be very suspicious if the number coming out of that was a very low number. I'd be worried about whether the control was working properly. So this is, first of all, evidence that there is a proper check being made here, and it's identifying errors, because humans make mistakes, either deliberate or accidental. And so you'd expect to see something like this just from experience of auditing other systems. Is it pointing to a trend in any direction? I don't think so at the moment. And we say in the report that HMRC is working with it. Where it identifies a cluster of cases with a particular employer, it does engage with those employers to point that out and to understand the system that the employer has in place for correctly identifying Scottish taxpayers, and updating the PAYE system accordingly. And we think that's an effective approach. So yeah, I think there's no evidence that's becoming a bigger problem, or there are a higher number of problem employers in this case. I think the system for identifying it and then following up at employer level is a good one and seems to be working.
Thank you. Now, last year HMRC said there were more errors on the S code by large businesses and businesses in the financial and insurance sector, which quite amused us. Is that still the case?
Can I read Peter in, who might have more detail on that?
Yes. I would need to double check, but I believe it is still an area that HMRC are focusing on at the minute.
If it is still the case, why is that not being sorted out?
I think in terms of HMRC strategy is to target employers and to try and educate them around the need to ensure that they get the right tax code prefix put in place. So a lot of it is about education to make sure that they do that, and some of that will take time.
Well, it's certainly taking time. It's not your fault. It's HMRC. Can I ask you? Sorry, Mr. Davis. Do you want to come in?
Thanks. I suppose what I would say there is, of course, you want an escalation. You want to see an escalation there. If a company, despite fair warning and constructive engagement from HMRC, is not improving its performance, they do have ways of ratcheting up their attention. So, this may be something. If this continues to be a reported issue from HMRC, it may be something we can follow up in more detail for next year.
Yes, that might be worth doing. The other issue which was raised before is the issue of missing addresses, and that still appears to be an issue. What's the scale of the problem now?
One that's common across the tax system. Again, if this is, people's lives are complicated and sometimes messy, and you can have rapid changes of addresses over in a short space of time, and systems like tax systems struggle to keep up with just the reality of people's lives in some cases. So I think, again, a level of this kind of error is just inevitable in any tax system, however well it is maintained. The question is, keep an eye on trends over time. If this is a worsening problem that requires some kind of focused attention, of course it should get it. I don't think we're signalling that in our work so far. Again, I think this is just a feature of a compliance system that is essentially working to identify errors.
Well, the issue seems to be that HMRC can't match addresses to postcodes and people. That's basically it.
Yeah, and obviously when you've got new developments, then you need to update the records accurately for new addresses. So it's a kind of dynamic nature of both the property records and the taxpayer records, and So you've got not just changes in as new developments come on stream, but you've got people moving between addresses as well. And those are the reasons why you end up with gaps in the record that need plugging.
Okay, I just don't understand why it's still such an issue. I've just got one final area I want to ask you about, because there's mention in the report of wealthy taxpayers. How would you define a wealthy taxpayer?
Well, I mentioned in my evidence earlier on that we did a separate report on HMRC's approach to wealthy taxpayer liabilities across the whole of the UK in 2025. The definition that we included in that report is the one that HMRC uses, and we commented quite a lot actually on the impact of that definition, which was essentially income over £200,000 a year or assets over, I think, 2 million. And so that's clearly set out in that report. That's how they've organised their focus around wealthy taxpayers. But of course, that just using that definition covers a very wide range from the super rich to the rich, and so there was a lot of debate in the UK Parliament about whether that was a useful definition. But that report sets out in detail how they approach that segment of the taxpayer population.
And do we know how many of these individuals there are in Scotland and whether the number's gone up or down?
Not for the purposes of this report, I don't think, no. And this is back to the granularity of HMRC's records, because they don't approach Scottish wealthy taxpayers as a separate group. They deal with them as UK wealthy taxpayers. And so the compliance controls are applied to people who meet that definition in Scotland are the same as across the rest of the UK.
And yet these wealthy people, according to the report, have individual compliance managers. So you would think that HMRC, so they get their own person to deal with. You'd think that HMRC would know where people live then if they're dealing with them on such a personal basis.
I suspect they do know where those people live, but and there you're talking about the very top end of the range that I described. So yeah, I mean that's a system they've used just because of the sheer essentially the return on HMRC's investment from working with people who pay so much tax is very substantial. That's why they've approached it in that way. And actually, the conclusion of our report for the UK as a whole was that HMRC's improved its approach to dealing with compliance by wealthy taxpayers, and that's reflected in a very significantly increased tax take from them in the last few years. So actually a good news story from the kind of tax collection point of view for that segment of the population.
Yeah, I mean, we're interested in the tax take in Scotland, really. So, you know, have these wealthy people or very wealthy people, has the tax take from then in Scotland gone up?
Well, I think the Auditor General for Scotland pointed out the substantial contribution that the top section of taxpayers make to the overall total in Scotland. That's in our report. What I would say is that those controls I was describing that we think are working better now in the UK as a whole also apply to Scotland. So I think you can take some comfort from the fact that HMRC has a better approach to wealthy taxpayer tax collection than it did a few years ago.
Okay. Thank you, Convener.
Thank you. I'm going to bring the Deputy Convener in. Before I do, I just want to go back to this thing about the financial and insurance sector. I mean, of all parts of the economy that I would expect an employer to be on top of tax codes and tax arrangements, I would have thought it would be the financial services sector. And you spoke earlier, Mr Davis, of deliberate or accidental mistakes. Would it be reasonable to infer that these are deliberate mistakes being made by the financial services sector?
I've got no evidence on that, I'm afraid, as you expect. I'd try and stick to that. But I think that's definitely a question for HMRC. They might have more insight than we have at the moment as to what is going on there, why is that sector posing a particular problem. I mean, it could be, for example, that it's the sheer size of the business, so that they're dealing with employees all over the UK and are, struggling to identify the difference between their Scottish and their English employees, for example. But I'm guessing there, and so the question is really, what's the evidence that HMRC's got so far? Why is this sector a problem? As you say, it doesn't stand to reason. It ought to be well within their sphere of competence.
Yes, and it's the fact it's persistent, I think. So that was a speculative defence on their behalf. I think there are speculative prosecutions we could also mount as well. But I'm going to now turn to Jamie Green, the Deputy Convener. Jamie.
Thank you. Apologies about the noise. It's not my stomach, although I haven't had my breakfast. It's nearly finished. I'll tell you what, in the last few minutes we got Mr Davies with us. I appreciate your logging off at 15:15, so I'll maybe start with yourself before my other lines of questions I'll aim towards the Auditor General, if that's okay with the panel. Again, one of the issues that came up last year, and this comes up recurringly, is the complexity of working out, both as a Parliament and probably from the government's point of view, is how much revenue it expects to take from its tax policies versus how much it actually gets when the outturn delivers, and over a period of time whether these policies are producing the levels of income that the government thinks is required to make its spending decisions on. And so much of this is based on estimates and assumptions by various bodies, including HMRC, the SFC and others. How do we get to a position, Mr Davies, where we're relying less on estimates and assumptions and we can get into more accurate forecasting so that the government has a better idea of how much these policies will actually raise in financial terms?
Also, it's true for income tax. It's always true that you are estimating the amount that you'll receive because you set the tax rates before the beginning of the year. Of course, the economy changes, so economic growth goes up and down, jobs are created or lost, and that affects the amount of income that people earn and therefore the tax they pay. So it's inherently an estimate for the year. It produces a budget, and of course it's in everybody's interest that budget is as soundly based as possible. So using the best available data to set the budget, I think, is the key point, and that's where the Auditor General's work on the Scottish fiscal framework comes in, I think, and he's much better placed to comment on that than I am. But just pointing out, there's inherently an estimate involved in every budget process, particularly for income tax. The interesting feature of the Scottish system, of course, is even with the outturn, the vast majority of that is based on actual figures from actual taxpayers. Even so, even with the outturn, 5% is still estimated, as we point out each year, slightly reduced this year, but still around about 5%. And that's because HMRC doesn't have the granular data to be absolutely precise about the allocation of some of the smaller elements of the total tax figure, and therefore uses an estimated basis for allocating a share of the UK total to Scotland. We think there's scope to keep reducing that remaining percentage of the estimate in the outturn, because clearly, if it is an outturn, we should be able to get to as accurate a figure as possible. So we think there's more to do on granular data to reduce that level of estimation.
Thank you very much. That's very helpful. And perhaps just briefly, and this reverts back to a previous line of questioning about identifying the volume of taxpayers in certain brackets. We know that just due to our population, there obviously is a much smaller number of people in Scotland in those top rates. But we do know that around 18% of taxpayers pay over 65% of all tax paid, so they are an extremely important group of taxpayers. I do find it slightly odd that no one can answer the question, for example, how many taxpayers in Scotland there are that earn over £100,000, over £200,000, or over £250,000 or £500,000, given how much tax they pay. I mean, it's a relatively small group of people. You could probably fit them in this room. So how do we get that sort of data so that we know whether it only takes one or two of them to exit the tax system in Scotland and we have a problem?
I think that's a question for HMRC. It's their system that allows them to identify different groups of taxpayers. And so you won't be surprised to know that kind of question comes up a lot in the UK Parliament as well. And HMRC answer is always based on the limitations of their system for giving that kind of data. So I think when you have a chance to question HMRC, it's definitely one for them.
And is that an inherent problem with the contract that they have with governments? I mean, presumably HMRC's job is to collect the money and produce the data. Is that they're not giving us more because they're not being asked for more? Should the governments be asking for more?
Oh, this is a big question about, I mean, clearly, government as a whole, HMRC as well, as part of that, has a big problem with legacy data systems that were designed a long time ago and have been left behind by modern technology developments. But, you know, government is not a greenfield site. It can't just build an entirely new system using the best available modern system. It has to upgrade over time. That's expensive, so it has to do that in stages as it can afford to. But yeah, there still remains a significant digital transformation job for HMRC, along with lots of other bits of government. It's a big focus for our work, actually, and we report regularly on progress on making tax digital, for example. But that is the long run answer to these kind of questions: is modern systems can make data analysis easily available. How do we get from where we are with lots of different old systems to a comprehensive suite of new systems that use the data more sensibly?
That's very helpful. Thank you. You'll be pleased to know I'll leave you in peace now, Mr. Davies. Shall I move?
Yeah, I mean, if Gareth Davis and Peter Morland, if you need to go off to your next meeting, we understand that. I don't think we as a committee have got any further questions for you, so you are free to go.
Thank you very much.
Thank you very much again for your contribution this year. Much appreciated. Thank you. And you've got more questions?
Yes,
Deputy
please.
Governor. Yep.
Auditor General, over to you now, if that's okay. So I wanted to just ask you about a quotation from your own report where you state that Holyrood's budget has been boosted by over £4 billion since the introduction of devolved taxes nearly 10 years ago. But that figure is, and I'm quoting your own words, significantly less than the additional tax raised over the same period, pause, a trend that is set to continue. Can I ask what you mean by that?
So this is, I think, goes back to some of the question with the convener, Deputy Convener, how the tax raised in Scotland doesn't automatically flow through in its entirety to the Scottish budget. What we've, what I think was coined in various reports, either the economic performance gap or the tax performance gap, because of the mechanisms essentially within the fiscal framework about the relative growth of the UK economy compared to Scotland. And really where we got to in our November report about needing a clearer alignment between tax strategy in Scotland and economic strategy, and for the Scottish Government to set out more clearly in its economic strategies how it intends to close that gap. And I think where we kind of, in some territory of speculation, is that it probably won't be possible to close that gap altogether, given the nature of some of the structural differences that exist between Scottish economy and jobs compared to other parts of the UK. I think that was best exemplified, as I mentioned, the letter from the Scottish Government to the committee in April of last year that talked about financial services industries in Scotland compared to elsewhere in the UK. So while Edinburgh has a very successful financial services industry, as does London, the nature and the remuneration of the jobs in the different cities are quite different. And that means that for Scottish economic policy to think about how it can continue to bring in high-paid jobs into Scotland as being the most likely driver of closing that gap in the years to come.
So it's more jobs, better paid jobs, higher tax base, essentially. Are those the solutions to this conundrum of this percentage in the pound not going into the Scottish?
Essentially, as you say, it's about growing the tax base with higher paid jobs will be within, as the application of the fiscal framework between the two governments operates in Scotland, is the most likely route through to closing the tax performance gap.
Right, so when we talked about this last year, I think it was the convener actually who posed the question, and he said that for every £5 that's raised for additional tax, only £1 finds its way to the Scottish budget. You replied and said, yes, that's correct. The figures that we've looked at today, one of 1.7 billion returning 600 million, which suggests that has improved somewhat. So for every £5, we're now looking at about £1.80. So it's heading in the right direction. But are we ever going to get to a stage where for every £5 raised, £5 available to spend, or is that just an impossible out scenario?
So it will be speculation. So it's probably these will be based on economic models, and particularly the forecasting that the Scottish Fiscal Commission does to support the Scottish Government's information to inform its medium-term financial forecasting, its tax strategy, and ultimately the annual budget information. So I don't know if that will ever be eliminated entirely, the tax performance gap. But I think what we say in our November report is for those strategies to be more closely aligned and to clearly set out transparently about how the economic approach, the initiatives, interventions will bridge the gap was a key part of our recommendation.
And as you mentioned earlier, part of that is the government being open and transparent about those numbers. And there are a number of areas where, just to give you some examples that my office had been researching this week, around comments or statements made by the government, including the First Minister, Cabinet Secretaries and other ministers stating the higher figure, the 1.7 billion, is often used by government as an example to justify its policy decisions. And I'm not asking for any comment on the policy decisions, but when these issues are discussed, it's only ever the higher figure that's mentioned. It's very rarely the lower number in terms of how much money that actually produces for the government to spend. Do you think the government ought to use both figures, for example, when talking about tax divergence?
As we mentioned earlier, both figures are there. So if you look at budget documentation, you will see the additional tax collected, and you will also find what that means for the Scottish budget. But we think they need to be more closely beside each other in the documentation to support transparency, effective scrutiny. I think as Richard might want to say a bit more, just to elaborate on his earlier point, about our consideration of the 26-27. So we've seen some budget documentation, seen some movement, but not yet in a way that you would very clearly see the positioning of tax take relative to what that means for the Scottish budget. So there are more opportunities to improve transparency on that point, but I can turn to Richard briefly if there's anything he wants to add.
Thank you, Auditor General. Probably not too much to add based on what's been said earlier. Both figures are important. The up to tax raised gives an indication of what the impact of the policy-only environment would be, and the net figure gives you more information about what the spending power consequences of those are. So the SFC will also sort of forecast these figures forward. Those are available within the SFC forecast evaluation, and then obviously it's included within the budget documents. As the Auditor General said, the closer those two things are together presentationally, the easier it is for budget scrutiny to understand what each of those figures mean and how that supports what the Scottish Government wants to do in terms of fiscal sustainability and annual budgets.
I guess the problem is, how can the public scrutinise these figures if they're only ever quoted one of the numbers? And the example I have is probably the worst case of it is the First Minister himself, who, and again I'm quoting for the record, according to the Scottish Fiscal Commission, the policy choices that we've made will raise up to £1.7 billion this financial year, and that will help to pay for blah, blah, blah. And there's a long list of things that is included in the rest of the quotation. Now, from the general public's point of view, you'd be sitting listening to that going, fine. I may not agree necessarily with tax divergence decisions made by the government. However, it does raise £1.7 billion to spend on all these free things that apparently we get. But we know that's not the case. So unless these numbers are quoted by senior members of government, the public will have no idea whether how accurate they are or whether they're relevant to the conversation.
So I think it really just goes back to the key message one in our report from November, where we reference both those figures. So the Scottish Government expects to raise £1.7 billion from Scottish income tax through its policy choices, but only £616 million is projected to benefit the Scottish budget. And we think there's a need for more transparency about the difference and why it exists. And really going back to what's fundamentally the key recommendation for the Scottish Government to more clearly set out how it intends to bridge the difference between those two numbers through its economic strategy in the years to come. As ever, through our work, it's our intention to follow up, and we'll continue to monitor and report on progress on how that's set out and the steps that's taken to close that.
Okay. And my final question is just, again, some comparison from your last visit to talk about this issue last year, is whether we get a feeling whether things are improving in some areas, and I do hope that they are. But if you look at some of the statistics we looked at last year, which are relevant to what you've just said, Scottish average earnings last year grew 3.1% lower than the rest of the UK, and employment rates grew by 3.2% less than other parts of the UK. Now, that was 12 months ago. Do we have any idea of whether we're starting to catch up in some of these areas?
So I don't have that detail to hand. I don't think either of us do today. Certainly it's something either we can look at, or we can perhaps signpost the committee to the most up-to-date figures.
Yeah, and included in that would be, I think, another key area around economic inactivity, where, again, there's some divergence, particularly in younger people, quite a substantial difference in terms of inactivity levels. So I guess these are the sorts of statistics we'd be wanting to get a feel for whether there is improvement or whether that gap is narrowing in any way or getting worse, because both are relevant and important to us. Okay, Convener, thanks.
Thank you. Because we were short of time earlier, I'm going to ask if any members of the committee have got any further questions they do want to put, and Colin Beattie is indicating that he does, so with a degree of brevity. Colin, over to you.
Yeah, it was really just, if you recall, we've in the past been challenging some of the adjustments and estimates and the impact on the overall figure, looking at them in the aggregate. Now, we did have a very useful private briefing with HMRC last year, and that was really helpful in giving us some background there. I noticed in this particular report that they've actually greatly reduced their references to adjustments and estimates, and they no longer detail them. They give us sort of just an over thing. So what I was going to ask you is, the NAO report does detail some of the estimates and adjustments, by no means the same level as before. Have you got any more detail on how these estimates are audited? Who actually looks at them and checks the logic on this? And on what basis is there an assurance that these estimates are actually accurate?
So it's probably going to take me into territory and commenting on specifics of what the NEO have done that they themselves are far better placed to answer, Convener, in terms of the steps that they've taken to do so. What maybe refer to, if I can find the right reference, Mr. Beattie, there's a table in the NEO report that sets out some of the estimates and deductions. Figure 2, actually, if I'm picking up the right table. Couple of things. One is relevant. One is this will be undertaken as part of this audit, and then also for the NEO's overall audit of HMRC. Our work, as hopefully is helpful to the committee, is not to re-perform the NEO's audit, but rather actually to take an overall assessment about the adequacy of the approach and are their conclusions reasonably based, and that's what we've done. So there's perhaps a limit that I think either of us are able to give you the detail of a response that you're looking for. And as I say, Convener, I'm reluctant to kind of represent the NEO's work for good reason. Richard?
Just briefly, as the Auditor General raised on figure 2, the Scottish outturn figure is largely based on actuals as opposed to estimates. We can see that it's 115 million estimates there, as opposed to 17 billion as the total figure. So there's some assurance from almost the way that it's collected in terms of after the self-assessments are completed and so on. There's also a slightly more technical point, which is around how these estimates are proportioned. So, as the controller for the CNAG of the NAO was saying, because there's a similar strategic picture of risk, when these estimates are applied, they'll be applied in equal proportions to both. On one level, that doesn't matter so much, but when we're talking about what that means for how it works through the fiscal framework, it means that it makes that more marginal because it's applied equally across or proportionally across Scotland and the rest of the UK.
Okay, I'll leave it at that. I think any of the other questions is for NAO.
Okay, that's fine. And we can always, of course, follow up with correspondence with NAO with any outstanding questions we've got to them. My final question goes to that point about the cost of administering the Scottish income tax and the service level agreement that exists. And I think there are committees in place that monitor that and look at the quality of data. I mean, it always strikes me when we consider these reports each year that the administration cost is quite low. I think it's £1.2 million. And I always start to think if there was a higher administration fee paid, could we get more Scottish level data out of it? I don't know whether you've got any observations about that, Auditor General.
I think what I would recognise, the scale is quite stark, Convener, in terms of what is paid relative to the amounts that are received. So it's probably a question, I think, more for the NAO and the Scottish Government, whether they're getting value for money. The figure that comes to mind, though, is there are further options available to the Scottish Government to consider whether there is more activity they would wish undertaken. I think it's on a further analysis of the Scottish specific tax gap, which I think is a figure of £5 million that's quoted, would be the annual charge the HMRC would levy upon the Scottish Government to do so. It's clearly important for the Scottish Government to think about what comes next in terms of supporting the accuracy of estimates, forecasts, and ultimately the overall amounts that are collected. But I think we certainly note the figures, and and you can see from Part 3 of the NAO's report that they are reporting that those are fair and accurate.
And again, the Scottish tax gap is the difference between what should be paid and what is actually paid, isn't it, in tax? And so there's been discussions over the years about whether HMRC would start to collect that Scottish level tax gap data, and a suggestion in this year's NAO report that they are considering it. I mean, do you get any sense of how close we are to that figure being calculated and that being a part of the annual reporting, which certainly I think this committee would find very useful indeed?
I think it depends on really what next steps the Scottish Government chooses to take, whether it commissions effectively HMRC to undertake that work. But I think as the committee heard this morning from the CNAG, given the divergence of tax regimes between Scotland and other parts of the UK, and particularly I think the discussion, the evidence that you heard about the opportunities that those most wealthy of taxpayers can take, is that level of understanding about the tax gap to support assurance that the money that is due to Scotland is being collected, along with the other compliance arrangements. So you can see that from the CNAG's recommendation that in terms of pace and totality of focus, look like they're soundly based.
Okay, well, thank you very much indeed. And it's been a useful, if albeit brief, session this morning. And I think there are some further elements of the NAO report that we will want to follow up. But for now, can I thank you, Auditor General, for your evidence this morning, and Richard Robinson, can I thank you too. And as the committee agreed earlier, I will now move our proceedings into private session. Thank you.